Welcome to CoreLogic's Housing Market Update for May 2020. As the world focuses on containing the COVID-19 pandemic, I hope that you and your families remain well and safe. Housing markets have been impacted by the sudden weakness in economic conditions and a plunge in consumer sentiment. However, there has been a significant contrast between housing values, which have shown some resilience to falls, and market activity, which has dropped sharply through the second half of March and April. Most regions recorded a rise in home values through April. However, the monthly pace of growth more than halved, dropping from 0.7% in March to 0.3% in April, which was the smallest month-on-month movement since July last year, when the national index was flat over the month. The 6 months prior to March saw national housing values rising at the average rate of 1.1% per month, highlighting how fast the growth has left the market. Although housing values were generally slightly positive over the month, the trend has clearly weakened since mid to late March, when social distancing policies were implemented and consumer sentiment started to plummet. The sharpest reversal in growth conditions can be seen in Melbourne, where housing values nudged into negative territory through April, down 0.3%. Growth in Sydney values has also slowed sharply but remained positive, rising 0.4% over the month. To provide some context, the 6 months prior to March saw both cities averaging a nation-leading monthly growth rate of about 1.7%. Hobart was the only other major region to record a decline in home values through the month, down 0.1%. Hobart has the most exposure of any capital city, at least proportionally, to the industry sectors that are most heavily impacted by COVID-19 in terms of employment, with 12.7% of the workforce employed in the accommodation and food services sectors and the art and recreation sectors. Despite the weakening in housing market conditions, some cities have outperformed the 6-month average. Perth, for example, saw values rise by 0.2%, Adelaide was up 0.4%, and Darwin values were 1.7% higher over the month. Each of these cities has shown a larger gain relative to the 6-month average in April, demonstrating some resilience to weaker conditions. Other indicators of housing market conditions haven't been as resilient. CoreLogic estimates of settled sales plunged by around 40% in April as buyers retreated to the sidelines and listing numbers dried up. The substantial drop in sales activity is supported by a similar fall in the number of mortgage-related valuation events across the CoreLogic platforms, which account for about 85% of lender valuation instructions. Additionally, activity across CoreLogic's RP Data platform, where the large majority of real estate agents undertake the research to prepare a property for sale, was down by about 60% prior to Easter, providing a firm signal that industry activity has been hit hard by the drop in active buyers and sellers, as well as policies preventing open homes and on-site auctions. Encouragingly, real estate agent activity did show a partial bounce back after Easter to level out around 40% below the same time a year ago. The decline in real estate activity is also showing up in the number of new listings being added to the market, which was tracking about 35% lower at the end of April relative to the same time a year ago, and 43% below the 5-year average. The reduction in advertised stock levels at a time of low demand is one factor that should help to insulate housing values from a more material downturn. In the context of rapidly weakening economic conditions and the broader COVID-19 related disruption, the April housing market result looks remarkably resilient. The Australian version of this global health and economic crisis is only a month and a half old, and it looks inevitable that there will be some downwards pressure on housing values over the coming months. The magnitude of falls depends on a broad range of factors, with most hinging on the timing and the extent of social distancing policies being lifted. The good news is that Australia has managed to flatten the spread of the virus much more effectively and efficiently than expected, and we're already seeing signs of an easing of social distancing policies in some states. An early return of economic activity should support a lift in consumer spirits, which in turn should see housing market activity sparking back to life. Plenty of downside risk remains for housing values. However, there are a variety of factors that will help to insulate home values from a material downturn. A key factor is the leniency provided to distressed borrowers affected by COVID-19 by Australian banks. Eligible borrowers can take advantage of repayment holidays over a 6-month period, by which time the economy will hopefully be in better shape. This policy is central to limiting the flow of distressed properties onto the marketplace, which could have otherwise been a source of more significant downwards pressure on home values. Additionally, the anticipated high rate of unemployment is likely to be most impactful on areas of the workforce that have lower rates of home ownership, which is another factor that should help to keep the number of distressed properties to a minimum. There's also the unprecedented level of stimulus to consider, which will help to keep businesses afloat and workers in a paying job. A sharp reduction in advertised supply levels is another factor helping to safeguard home values amidst a fall in buyer demand, as well as record low interest rates. No doubt the coming months will provide more clarity about the direction of housing markets. One of the most important indicators to follow will be the measures of consumer sentiment. If consumer spirits do start to bounce back to more normal levels, this will be a firm sign that consumers will be more able to make high commitment decisions like buying or selling a home. CoreLogic will be tracking all the twists and turns in the housing data on a daily basis. You can tune into our research at www.corelogic.com.au.